Hey everyone, thanks for tuning in. This first trade will be on the long side of the market. This time though, and as you can see, I am looking at a 15-second time frame instead of my usual 1-minute chart. The reason I'm doing that is because when I'm looking at a chart, I always try to look at the big picture first. Obviously, I want to see what the overall trend is before I actually start looking at individual trades. As you know, the market is fractal, which implies that price action has a comparable structure across various time frames. In other words, what takes place on higher time frames is mirroring what happens on lower time frames. However, I think that sometimes it can be very helpful to look at even lower time frames to sort of get a better understanding of the macro structure of a trade. That's why I'm currently looking at a 50-sec chart instead of my 1 minute. I think that by looking at a shorter time frame, you can get a better sense of how the different parts of a particular trade are unfolding. So starting over here, after a 50-point decline, which represents, as you can see, the highest expansion point of this trading range, the market starts reversing off of this 15-minute imbalance zone. As you can see, this is a key zone of support that could have signaled, had it been broken of course, that could have signaled a move towards the 36.80 area or possibly lower. Certainly, this relief rally prevented prices from falling any further, taking them back up above New York midnight. Now, the shift, I should point out, was not a blowout in terms of points added to the tape. It only increased by 10 points or so. However, it did help to ease selling pressure. After that, we have price create a tight range in which New York midnight acts as support, while the red line over here serves as resistance. An impulsive move to the upside follows as price fills this imbalance area before pulling back. After this move lower, we see a nice retrace back to the upside. This is then followed by another push to the downside. But note here, we don't observe the same level of material price decline as in this portion of the chart here. Instead, the market finds some support above New York midnight, and eventually this leads to a period of consolidation before the price starts trending upwards.
Order filled.
Now, if we can get some acceleration, we can get to this imbalance zone up here. So guys, after keeping an eye on these key levels, I decided to go long.
Target filled.
Alright, with this trade complete, let's move on to the next entry. So we are looking at a 15-minute time frame for another long trade. Obviously we have our range set between these two horizontal white lines, which represent the previous day's low and high. New York midnight, as you can see, prints just above 37.30. Now, after pushing to fresh highs, the market reverses, consolidates, breaks below New York midnight, and then goes for a 100-point nosedive as it gets close to retesting its range lows along the 36.15 area. Once this large imbalance zone, however, is filled, the price flips and heads bullish, And let me just switch to a 1 minute time frame here so we can see this more clearly. Okay, so as you can see, after printing above this breakout structure right over here, the market continues trending higher as it pushes right through the 39.42 resistance level. I think that this 15-point upside is significant as it opens up the possibility for further gains ahead. Now, the market, as you can see, has obviously been range-bound for the past few minutes here, but this latest surge could signal a shift in momentum, and that's why I believe that the key level to watch now is this support level. That includes this order block position. If we hold, this support area could act as a catalyst for a reverse to the upside, thus paving the way for a possible rally into this imbalance zone up here. I think that in trading, especially if you are new to it, it's always important to be aware of potential turning points in the market, order blocks, for example, which, as we know, are large orders that are broken up into smaller orders to trade at multiple price levels, or support and resistance levels can offer clues as to where prices are likely to head next. However, I think it is important to remember that these levels, especially support and resistance ones, are not always static. And what that means is that what was once a support level may become resistance if prices break through it and begin to move higher. Similarly, a resistance level may turn into support if prices fall below it and start to head lower. So guys, what I'm basically trying to say here is that you should always be on the lookout for potential areas of support and resistance so that you can anticipate future price movements. As you can see, I got really close to getting stopped out here, but obviously I was spared.
Target filled.
Alright, so that does it for this trade. Thanks for watching, and if you liked the content, please make sure to like the video and subscribe to the channel. Also guys, if you would be so kind as to share my videos, it would be very much appreciated. Thanks again, and hope to see you in the next one.